Disclaimer. This recorded conversation is intended for general awareness and educational purposes only. The views and opinions expressed by the guests are shared in their personal capacity and do not represent the views of any organization, employer, institution, or association they are affiliated with. This content is not intended to provide professional advice of any kind, including but not limited to medical, legal, financial, investment, or technical advice. Viewers are encouraged to consult qualified professionals for specific guidance. The discussion avoids any confidential, proprietary, or organization-specific information and is meant purely for knowledge sharing in an informed conversational format.
Hello everyone, welcome to Brief Insite. Today on our expert chair we have Ullass Hegde. Ullass Hegde is a certified AMFI certified mutual fund advisor. So today's topic would be on mutual funds. Welcome Ullass, welcome to our show.
Namaste.
Hi. Ullass, we have been seeing a lot of ads and the videos by the cricketers like Sachin Tendulkar, Mahendra Singh Dhoni. They keep telling that mutual fund sahi hai. So probably today we'll discuss about it and we'll just let everyone know that mutual fund sahi hai, kyun sahi hai. Okay, we'll only have a general discussion about mutual funds, and definitely we have an expert on the chair today. So my very first query to you would be, for someone completely new to investing, how would you explain what mutual fund is and why can it be a practical starting point for building a wealth?
Hello, Pawan. First of all, thank you for inviting me. I'll try to give my opinion on mutual funds because my expertise is that I'm a satisfied investor first, and after that I came into this profession to guide people on how to invest in mutual funds. So basically, if you're driving through a lane in an unknown place, if you don't know where you're heading to, it would be practically a good thing to ask someone who knows the area better. So earlier it used to be the panwala or the local rickshaw driver. So he would guide you and he would help you to reach the destination safely and to the right destination. Or nowadays what we do is we depend on the Google Maps. So similarly, if you're new to investing, it is always sane to depend on someone who is an expertise, who has the knowledge, who has information, and who is professional and qualified to manage your money and to create wealth. And in India today, for a person who wants to invest even a small amount, some 100 rupees, he wants to invest into the equity market. He wouldn't find maybe he wouldn't find a good company stock for 100. At the same time, when he wants to diversify, but if you do it through a mutual fund, what will happen is it will be diversified into many companies, and he'll get the benefit of a professional managing his money, and it is very liquid. And since tomorrow, if he wants the money, also within a click, third day he'll get the amount into his bank account. So there is no other investment avenue which has all these benefits combined together on a single platform. So that is why if somebody is very new to investing, it is always better in today's world. And if somebody wants to invest it even for a day, or say 2 months, or 6 months, 6 years, 60 years, so whatever may be your investment horizon, there is a product available in mutual fund. So mutual fund sahi hai and mutual fund sabke liye hai. So that is the kind of that is the kind of investment mutual fund is today in India, at least.
Yeah, thanks, Ullass. So compared to the Western countries and India, how popular are mutual fund products nowadays? Because at least in our parents' generation or a generation prior to us, we have not seen many people investing into mutual funds. But what I see is after 2000 or onwards, we see a traction in the mutual fund market. So how do you see this perspective?
No, because earlier mutual fund was not an option as like how it is available today. So we have some 47 AMCs today, which are into investing, managing your funds. But earlier, when it started, it was only UTI, and after that, some private companies came into like HDFC, Nippon, SBI. So, but even then, during the 95, 93, 94, when it started, there was no historical data to support how your how wealth could be created using this mechanism in India, at least. It was in the US, mutual fund is a very accepted investment avenue, and more people invest using mutual funds than what they deposit into a bank for a fixed deposit. But in India, it is I wouldn't say it is opposite, but slowly there is a shift from fixed deposit to mutual funds now. Maybe because youngsters are choosing mutual funds over fixed deposits, or maybe even aged people, they are now shifting to mutual funds because there is availability of track history for the last 25 plus years. And mutual fund in India has created tremendous wealth in the last 25, 30 years, and it is very transparent also. It is not something like you say, I wouldn't say that insurance has not done such a job, but mutual fund is more transparent than what insurance does, because you know the fund manager, you know where he's investing, you know which companies he's exiting, and the expense ratio, how much commission is paid to your distributor. Everything is clear, everything is visible to you. Even if you don't want, you will get emails, you will get posts, and everything is available to you. So it is very transparent. That is why mutual fund is gaining popularity today. And there is SEBI, which regulates. There is AMFI, which takes care of all these disciplinary actions. So it is a double. It is a train which runs on double engine. So there is the investor need not bother about anything. So Indian government has made mutual funds very simple and very effective.
Yeah, thank you. And we have seen some of the people investing in real estate or the realty for the rental income. So, do we have any alternative products in mutual funds or any advisory for such people who have better alternatives in mutual funds?
Those who want to invest in real estate, if see they want to stay, if they want to purchase a house for them to stay, then there is no alternative. There maybe I can prove it to you on papers that renting a house is a better choice, but from an emotional perspective, it is always better to own a house. That is the Indian mindset. So there is no argument about it. But if you're investing in real estate and trying to earn a rental income out of it and then sell it out for a capital gain, so that works out to be only hardly 3 to 4% even in a metro city. There are some cities even today where real estate is booming, but it is not for a normal person to invest in such places. He wouldn't have the knowledge or the fund we needed to purchase a land in that area. uh, it is not for everybody. Like say if there is a real estate businessman, so maybe he can purchase a huge land, he can develop it and sell. He's making profit out of it, but that is real estate business. But a small person who has say 50 lakhs, it is very impractical for him to invest in an apartment or a small house and earn rental out of it. Even if he earns a rent, it would be hardly 4,000, 5,000 rupees. But the expenses what he's going to spend on the maintenance, finding a tenant, and if the tenant leaves, then there is a gap in between that cost. And again, if he wants to sell, the commission what he wants to pay to the agent. So considering all this, it is not an attractive investment avenue. For the pride of saying I have two houses, I have four houses, it is very good. But if you again, if you want to sell a house, say you have invested 1.5 crores in an apartment, and tomorrow you need urgently 25 lakhs, you cannot sell the kitchen, or you cannot sell one bedroom out of the whole house. So it is not liquid as such. Even if you want to sell the whole house, it may take some 5, 6 months. Alternatively, if you invest the same amount in a mutual fund, you can earn something called as SWP, the systematic withdrawal plan, where you earn where your monthly cash flow is there. I won't say it is a rental income. There is a cash flow generated through your investment, but at the same time, the balance investment what is there, there is the appreciation is there. It is very tax efficient. It is tax efficient compared to the rental tax what the government charges, and uh, there is tax deferment also compared to a fixed deposit. If you keep this in a fixed deposit, there is the accrued interest is taxed. But if in a SWP, Only the withdrawals what you're taking, only that part is taxed. The remaining part is not taxed, and the tax is deferred to a future period. Alternative is, even if you want to invest in a real estate, there is something called as REPIs today, where you can, similar to a mutual fund, where there are professionals to manage. They invest in commercial properties, which earns rent. So there are investment avenues which are cheaper compared to actually owning a property. So if you do not have so much extra money, like say you want to purchase a good property, you need some crores today at least in say Bangalore or any other place. So if you do not have that, if you have a small amount, then mutual fund is one of the best platform which can be very actually beneficial to you compared to owning a real estate which earns which you're where you're trying to earn a rental income.
Yeah, thank you. And when selecting a mutual fund product, so what are the key factors that one should consider to decide what is suitable for different types of investors? Maybe from younger to older, or aggressive to conservative investors. So how do you select products for them?
For example, for a mutual fund distributor, when he selects a mutual fund which is suitable for an investor, what we do is we run through his risk profile. We ask what he's investing for, how much, for the what period he's going to invest. So based on all these criteria, we prepare a plan. We say for so much to reach your plan, you need so much amount invest. So all this is the plan, and finally, then based on all these two factors, we select the schemes where he can invest, the schemes which are suitable for him to achieve his goals, what we call as financial goals. So this is the basic plan what a mutual fund distributor does. But there is something called as direct investment. This what I'm speaking is a regular mutual fund investment. There is an option for the investor to directly invest in mutual fund. But there what it does is directly there'll be prompts given from an app. They'll ask you to invest. This is the returns which a fund has given for the last 1 year, 3 years. So you look at that returns, what is given, say 34%, fantastic returns. So what the investor will have in mind is that this fund is going to give me 34% every year, year on year. It is like a fixed deposit. That fixed deposit gives 7.5. This scheme is going to give me 34% year on year. So directly invest in that scheme. That scheme could be a thematic fund, it could be a sectoral fund, it could be it could be gold ETF or a silver ETF. You don't know what it is. That is called as it is a behavioral issue. Actually, that is what the normal investor will do. He won't look at the long term goals. There is no diversification, nothing. He'll directly compare it to a fixed deposit because he's very this fixed deposit thing is very known to him. But mutual fund is not such a known concept to a normal investor. So he'll directly, maybe not actively, but in his subconscious mind, that is the comparison what will happen, and directly he'll choose this fund and he'll invest there. But what mistake happens is after 6 months, when he opens the same app, it would show that this fund what is invested, maybe say 20,000, maybe not very sure. If 20,000 that would have come down to 18,000, then again he'll panic and he'll say, okay, 20%, I have 10% loss. So this scheme is not good for me. He'll close that, he'll withdraw, and he'll stop his investment in mutual funds. But that is the last thing what you should do. First of all, there is no diversification, there is no plan, there is no process. He doesn't know why he's investing this 20,000. Maybe he would have needed this 20,000 in the next 2 months, but he has selected a fund which has given 34 returns in the last 1 year. That returns could be because of anything, and that if it is not continuing, he's at a loss. So all these things should be considered, well planned, and that is how we create a portfolio for an investor.
Okay, so you did mention what is one of the common mistake that a investor does. So apart from these mistakes, what are the other common mistakes that people tend to do while investing in mutual fund, and which they can avoid to reduce the risk?
To avoid risk, one thing is diversification. What he has to do, maybe he has to. What we do is we usually select different AMCs which has different investment strategies. So what happens is when one scheme is performing, the other may not perform because they have different investment strategies. and that is a very good combination, because when one scheme is not performing, the other will perform. So what will happen is the rupee cost will average, and it will work in the benefit of the investor. Mm, but usually what happens is, investors sees scheme wise returns and they'll say one is not performing, so let us come out of that. So what the investor should do is actually should look at the whole picture, the whole portfolio, what is generating. So that is how we do it. So that is one factor where investors can improve upon that. Looking at the whole picture, the whole portfolio is generated. It is actually a bunch of 5 7 schemes what we give to the investor. So he has to look at it as a bunch and not like an individual flower there. So he has to look it, if he looks it at as a bunch, it is very good. So as an MFD, what we usually do is we plan for a goal, and we show him that this is the goal. For example, wealth creation is the goal. We tell him he wants to create some 1 crore rupees in the next 10 years. So we ask him, don't look at the schemes. Like when you go to a hotel, when I was in high school, I remember my friend used to place his hand on the menu card and used to see that item which cost the most highest when it was a treat. So he would order that item. So the same thing, I tell them, you don't look at the schemes, you just look at this goal card. So goal card, what will tell him, for to achieve this goal, you need so much additional SIPs, or you need so much additional lump sum to be invested. Just concentrate on those two things. Rest of the things I'll manage. That is my job. That I'll do. You just manage with amount what you have to invest. So we'll just try to. I'm not saying I'm disturbing him, but what I'm doing is I'm trying to divert his mind from a thing which is not in our control, the scheme returns, to a thing which is in our control. That is the investment. That is in my control. The risk control is in my hand, like diversification, selecting a different AMCs, selecting schemes based on the investor's risk profile. These are in my control. Market returns is not in my control. So I'm trying to hide that thing from the investor.
Okay. So nowadays we have AI and AI ML technology. So how is this helping in selecting mutual funds or helping the people to do investments today compared to earlier ages?
I'm not very sure how is AI helping the investors, because I don't depend on AI to select the schemes. I depend on my intelligence to select the scheme for my investor. Because for my investor, I think I do a better job than AI, because it is mostly an emotional connect with an when it comes to investing, it is more of a behavioral pattern than an intelligence pattern, because sometimes intelligence doesn't work here. Sometimes the investor comes to me. If you ask an AI, there is something, there is some data which is already available to an AI. So if a 65-year-old person comes and asks an AI, I'm 60 years old, suggest me a portfolio. So based on the data which he has, maybe he'll suggest him a debt fund. But if the same person comes to me, I'll ask him what are his goals, what is his risk profile, so what he would have an income. So considering all these things, maybe his risk profile would be an aggressive investor. So maybe I can suggest him some funds which are pure equity funds also, considering his risk profile. So it is not a very good thing to depend on AI for each and everything. But say for I use AI. I use AI to say, if I want to come out with something, a great idea, I have an idea. Just to give it a new perspective. For that, I can use an AI. But for each and everything, if you are depending on artificial thing, then the natural flavor is lost.
Yeah, I totally agree with that. So just one last thing I wanted to ask about is how an individual can stay invested during the market's ups and downs. How can he control his emotions? Do you have any tips for that?
First thing is, he should first uninstall the app which is used to invest in mutual fund. He has to register for an SIP, and then he has to forget about the app. That is what I did actually. I didn't do it purposely, but what happened was I started with rupees 1,000 in one scheme, which is now the 10 rupees NAV has grown to around 4,500. It is an I can name it confidently because it is a wonderful fund, Nippon India uh, Growth Fund. So that fund I had started investing with rupees 1,000 in the year 2008. So I did it for around maybe 60 months. And after that, what happened was I changed my bank. And because of that, what happened was I didn't look at the mutual fund that this investment was going there. And I entirely missed that thing. But the other things were getting invested, the other amounts. This 1,000 had stopped. So what happened was during Corona time, there was ample of free time. So I was just trying to again look into my portfolios and all these things. So when I was doing that, I suddenly came to know that there is one fund which I had invested long back and I have forgotten about it. So when I looked there, I had invested around maybe some 60,000 rupees or something. So it had grown to around 2.5 or 3 lakhs maybe that time. So if I had looked at that, there was I needed that money in around maybe 2015 or 16. If I had taken that amount there, I would have consumed that amount if I had knew about this fund. I didn't knew about that fund. That is how that fund that value was still available there. So then I shifted that amount to my regular portfolio, and it is still intact there. So that is how you invest and you forget it until if you are investing for a 10-year horizon for the first 7 years, don't look at your portfolio. That is that is one biggest practice what you can do to save yourself from this panic. Second thing is there is no need for a regular investor to even for a mutual fund distributor, there is no need to regularly follow the market and do all things. I'm not doing the investment thing. I'm just doing the distribution thing. So I need not know what is happening in Ukraine. I don't know what US tariff is going to impact to the company. I need not know. I'm just disturbing my blood pressure looking at all these news. For information's sake, for my knowledge sake, it is fine. But for if you're looking at all these things and if you're panicking, and that panic if it is affecting your portfolio, then you are a bad investor. You shouldn't allow the market news, the market noise to disturb your investment decision. The investment decision should be based on the fundamentals and not on the trends, not on the noise. So this noise should be completely kept away from your investment decisions, and then only you can be a good investor.
Yeah, thank you. Thank you very much, Ullass. That was a very good insight for us. It was very nice having you in our show. Thank you very much.
Thank
And we'll
you.
definitely come back to you. And with your permission, I think we'll be very happy to share your contact with our viewers in case if they want further more information about mutual fund investments, if that is okay with you.
Yeah, that is absolutely fine. Even if they want me to review their portfolios, that is also fine. I can, if they have already invested, I can even review their portfolios. So I'd be glad to do that.
Yeah, thank you. Thank you, Ullass. Okay, viewers, that was Ullass Hegde with us in Brief Insight. See you all soon again with another expert on this show. Thank you. Thank you, Ullass.